Bitcoin at $57,000. And it looks like it's going to go down even more. Ethereum at 2,600 as the time I'm recording. We've had another 24 hours where more than $350 million were liquidated on long positions, both for Bitcoin and Ethereum. If you are a crypto holder and this is the first time that you see huge movements like this, it is possible that you are a little bit scared. So how do you react? What do you do? And how do you protect your portfolio? This is what we're going to be talking in today's video. So welcome back to another video. If this is the first time that you're watching, not the best scenario that we have so far, but it has been a couple of really red days for everything. Crypto, stock markets. The stock markets actually just lost $2 trillion in total market cap. And this was due to the recession that everyone thinks we are about to get in. So we have the stock market not performing very well. We have risks of global war incoming. There's a lot of people talking about the fights, the strategic positioning that is happening across all these major players in the economic and military scale worldwide. And crypto, of course, reflects this as well. So not very positive for your portfolio, for my portfolio, for everyone's portfolio. We have a lot of people shorting and making money with the shorts. And we had a lot of people that thought 60K was going to hold it, then 57K was going to hold it, and 56K is going to hold next. But we know, if you watched a few videos ago where I said that if we started liquidations below the 64K at 63.6, we would have a huge liquidation, and that would trigger a lot of liquidations under that price that could reach the 54,000. So we've talked about that before in this channel. So this is why I tell you to always turn on the notifications and share this so more people can be aware. Of course, we're not predicting the market. We're just covering the stats. So the stats show there was a lot of liquidations that were going to trigger at $63.6 thousand, and these eventually got triggered. So these liquidations created a cascade effect that is making Bitcoin fall so much. And when it falls, everything else falls in the crypto space. So how can you protect your portfolio in situations like these? Of course, you can short, long, whatever it is, the direction that you want to protect against, but you can also hedge with options. We've talked about hedging before, and it is basically protecting your portfolio, pretty much like putting insurance on your portfolio for a small amount of money. And as an insurance, of course, most of the time is just going to be money that you're going to be paying out and nothing will happen. But whenever there's a move just like this one, the insurance is going to provide some hedging for you and for your portfolio. So Everton, what do you mean? Well, let's say you have a car insurance, okay? And that car insurance is $100 a month. So every month you put out of your pocket $100 and they get to keep that $100. And for the whole month, you have no accidents. No one bumps you. Nothing happens. You don't need a tow truck. You don't need anything. So this $100, you could say that they were wasted, but no, because let's say the next month something happens and you have to call the insurance. So you call the insurance, it can be Geico, it can be AAA, whatever it is. You say, hey, I popped a tire, or I need a tow truck here at the side of the road. Then all of a sudden, these $100 are the best investment that you've made. This is the same for hedging with options. Maybe you're going to spend 11 months paying these options. They're going to be $100, $200, whatever it is, just a small percentage of your whole portfolio, of your whole position. But eventually this will be helping you to keep afloat. Well, everyone is going down -5%, -6% in a couple of hours. You at least are a little bit more protected. Maybe you're going down just 1%. Maybe you're even in the positive if you're making a very, very smart and good hedging against the short-term movement of the asset. So how do you do that? The simplest way is for you to buy a put. So let's say you have Bitcoin, right? So you want to hedge against your Bitcoin, meaning you want to protect your Bitcoin in case Bitcoin starts to go down. And how do you make money when everything is going down? Well, you can short an asset, but with shorting, it comes liquidations, okay? So you can lose that money. And what you can do is you can buy puts for the underlying asset. So puts on Bitcoin. The only thing that you have to choose is the right expiration. So maybe you do a monthly put to hedge. Maybe you do a weekly put to hedge if you believe this week is a little bit hectic, will be a little bit more hectic than the other one. Maybe you just do a quarterly, maybe half year, whatever suits your criteria. So by buying a put, if the underlying asset goes down, you could be profitable if it goes in the money. So that's basically how you hedge, how you protect your portfolio. So let's go to the topics and show that to you. But before I do that, let me show you these past few days I've been trading. And you can see on July 30th, I opened a position. It was 0.54%. Then August 1st, I made again 0.56%. Yesterday, I opened a position, 0.64%. And today we're going to sell another call just to create that passive income as we're accustomed. But if you want to protect your portfolio, so by hedging, you're going to buy a put. So let's do one of this together in case Bitcoin goes down even more. We go to put right here and let's say for the week. So we're going to sell for the week. So we go, let's say all the way to the 9th. So for this week, we want to protect ourselves in case Bitcoin goes to 54,000. So strike, we usually stay at the money. We don't want to go out of the money because even though it is cheaper for us, in case the asset goes down, you're not going to make that much back from the amount of money that you're losing from the underlying asset going down. So here we're going to go for the 58K and we're going to go for 8.1. So we're going to buy this put. There we go. And we bought our put. So we have our put bought. And in this case, if by Friday, the price of Bitcoin goes below the 58,000, let's say it goes to 54, 55, even 50, doesn't really matter. This option that I paid a premium for, it will become more expensive. So let's say I spent 20 bucks. These 20 bucks will become 30, 40, 50. And when I'm going to close it again, I'm going to sell this option. So I bought it for 20 and I sell it for 60. Well, guess what? Now I have 40 bucks in profit. So this is how it works. If the underlying asset goes down, the more it goes down, then the more I will make money with the put that I bought. Now, when you sell an option, it is the opposite. When you sell an option, you don't want the underlying asset to get close to the strike that you're selling. So right now we're going to be selling a call. So we're going to go and sell above the current strike. So right now it is at $58,000. We're going to sell maybe a 62, maybe a 61. We have to look at the charts and we decide from there. We also look at the premiums that we have right now to make sure it is worth our risk and it is worth our time. So if we look at the charts right now, we are in the dailies right here. And what we could do is actually sell a put, mainly because Bitcoin is way out of the Bollinger Bands. And what usually happens is it tries to correct and close back inside the Bollinger Bands. Maybe tomorrow will be a green day and it will be profitable for us because we will have the stock markets. Maybe the stock markets have a green day and that also affects Bitcoin. But let's look at the 4-hour charts to see how it looks there. For the 4-hour charts, it looks similar. We have a huge green candle right here that ended up closing inside the Bollinger. And now we have this first red candle that will close in 20 minutes. And we don't know if it's going to stay inside or outside the Bollinger Bands. If it stays inside, that is bearish. If it stays outside, that is a little bit bullish because it will try to correct and close inside the Bollinger Bands again. You can see that it tested the blue average here. It tested once, twice, 3 times, 4 times already. So this again is very, very bearish. And if we try to see around 3%, we're looking at 59.5. So let's look at 59.5 for our strike first, and then we can move on from there. So we're going to toggle the switch, the sell switch here, and we're going to go for tomorrow. And let's go for the 60. Let's go for the 59 first. From the current price, the 59 is 1.5%. Maybe this is too risky. So let's go for the 60K. And here we put 0.1. Actually, we have to toggle a call. This is good to take a look at. We have to toggle calls because we're selling above the strike. If we're selling below the strike, then we sell a put. So we select a strike again. We don't have strikes below the 62.5, which is odd. That makes no sense for us to sell. So let's see if it is worth for us selling a put, a 56 put. And here we go for 8.1. So we would be making 725 against the 666 in margin that we need. So a 1%. This honestly is too risky for me. We cannot sell a put to 56 because IV most likely is all over the place. Let's actually see right here. IV is at around 70%. So very, very high. On the call side is even crazier. But on the call side, we don't have strikes that are below the 62,500. So we are a little bit in a pickle because we cannot choose a different strike to have less risk. And this applies for both the put and the call side. Maybe let's see for the 6th here. What strikes we have for the 6th. So because there was a huge movement in price in just a short period of time, strikes are a little bit outdated because they usually have a range between X above and X below, and also IV and volume is all over the place. So honestly, for me on the selling side, there is no good entry right here right now, but I will keep an eye to see if by the end of the day we have some good entries for maybe not tomorrow, but for the 6th of August. And whatever entry I have, I'll show that to you on Wednesday. Meanwhile, the liquidations just keep piling up. You can see right now we have $116 million liquidated from long positions on Ethereum and $106 million liquidated from Ethereum. And if we look on the last 24 hours, we have $350 million liquidated in 24 hours, which is ridiculous and scary at the same time. And just to end the video, last week we were greedy on the Fear and Greed index, and in less than 7 days we went from a 71 to a now 34 in the Fear and Greed index, which is fear. Last month we were extremely fearful, all the way to 29, and when it comes below 20, I think it is extreme fear. So we can see how weird things are when a week ago everyone was cheering because Trump spoke at Bitcoin 2024, everything was dandy, everything was great, and now we're back at the fear levels. So before we end the video, I just want to say, if this is your first rodeo and you're scared, don't panic, don't listen to anyone, stay off of crypto Twitter, Reddit, whatever source of news you use, just because there are a lot of people, they just follow the masses and they just pass along whatever message they want to pass of chaos, of FUD, of FOMO, whatever. So don't listen to these people. And if you have Bitcoin or Ethereum, just wait it out. I don't think it is worth it for you to sell it right now, to buy it back again, because you're just going to sell low and buy high. And this is just going to make you worry even more. So just stay put, wait it out. If you have a little bit of cash to protect yourself, do that like I did in this video. Maybe we won't need it and Bitcoin will climb back again to 60K. Maybe tomorrow we will have a green candle. I hope you have a good week this week, and I'll see you guys on Wednesday. So stay tuned. Peace.